Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And do not go anywhere. Don't click off anything. If you have been thinking that companies are taking advantage of inflation and increasing their prices way beyond that to make record profits, this is your video. No, this is not stocks. This hella pissed me off, though, because this is rough. Some of these companies are really, really taking advantage of us. It's awful. So we're going to take a look at it. Two Super Guys Trade Stocks.
So what we're trying to answer with this video is it just inflation? They're just passing along like the increased costs that they're experiencing onto consumers, or are they just out and out using this as a lie and a smokescreen to steal from consumers and get greedy and rich on the whole back of American households? That's the real question with this video.
Yeah, and it seems like it's half and half. We looked at 7 companies, half are good, half are bad. It may be kind of surprising which are good or bad.
Yeah, you got to vote with your dollars. So this is a chart going back. It's a 12-month chart of CPI, Consumer Price Index. That's basically the pain we're all feeling as consumers of products. This is designed to represent, how expensive is the cost of living becoming for us. As you see, we had a giant peak here back in the kind of summer of 2021, and it started to cool down some. But still overall price levels are significantly elevated from what they were pre-pandemic. You can kind of look at that with the different index we're going to show you here in a second. So this is the producer price index, which is another one that's designed to look at what companies are paying for products. Okay, but if you notice, they also had a big run up. Their peak was even higher than it was for the CPI. They peak at like over 11%. The CPI peak was like 9 point something percent. So it certainly experienced a lot of producer price pressure. Okay, so that's true, but which companies really got screwed us?
It's almost back to where it was. That's an important part there from like on that graph. It's still elevated, but not near what it was 21, 22.
Yes, exactly. So if you guys haven't seen this video before, I did one specifically looking back at my own lunch order and calculated my actual annualized rate of inflation on this lunch order was 18% over the last 2 years effectively, which is just astronomical. So we're going to look at company kind of earnings in order to see if we can really ascertain that. If you look at the actual index levels, this is kind of what I was referring to with the CPI and PPI. You're looking at a 4% CAGR or compound annual growth rate for CPI and 6.83% for PPI, the producer price index, over the last couple of years from the pandemic kind of inflation surge, if you will. So they did really experience a lot of inflation on the producer index, and not all of that got passed on to consumers. Some companies did get kind of cut in their terms of their operating income, but other companies just went to the moon as far as jacking up their profit rates. So we're going to look at which companies are which. And one other thing I wanted to add here, this is looking at that earnings per share on the S&P 500. We are sitting at near all-time highs as far as the actual earnings of these companies. So are they really truly getting rich on the backs of American households? Is kind of what I wanted to look at with this, right? One thing you should understand before we kind of get into the next section here, we're going to look at individual companies, is what exactly is operating margin. Operating margin represents the portion of sales that is profit on a gross level. So if I make a $10 item that costs me, or sell an item for $10 and it costs me $4 to produce it, so I have a $6 or 60% operating margin. That's what operating margin is designed to represent. And then there's a net margin where I take off all my overhead, my insurances, my other kind of corporate entities, my sales structure. And that's when you get to net margin, okay? That's the actual profit of the business. We're going to look at the rates of operating margin and net margin for a few different businesses here.
Yeah, so when you normalize that into a percentage, it gets rid of the inflation aspect. Because if you're making more percentage-wise now than you were 2019, you are fucking people. And
exactly.
Yeah, not good. So I took a look at Target, Costco, and Chipotle. Say to yourselves, which one of these companies do you think is terrible? So the way that I did this was I took every quarter from 2019 through 2023. I did an average per year to get completely normal values. So if you look at 2020 Target, it's not 5.87 on someone else's because they just look at December's. They just look at the fourth quarter. So I did it completely normalized. As you can see, green, this is before COVID. This is your control. Blue, it's COVID. I kind of don't count these numbers that much at all. But you can tell Target went up briefly above the 5.65 control and is actually below where they were for their operating margin. Okay. Yeah. Costco barely fluctuated the whole
Yeah.
time, to be honest. This was probably the most fluctuation, which I can show in a graph. Chipotle, this hurt. I, I since we made this video, I have not eaten at Chipotle. I have gone,
Wow.
yeah, I'm pretty angry.
Yeah.
It's gross. So they are killing it at 6.7% margin. They are
What?
at 15.8, and that's a low number because this quarter it's going to hit 17.
Oh man. So they are absolutely screwing the American
Mm-hmm.
household right now at Chipotle.
Yep.
And you can't even get extra guac with that. That's disgusting.
You were not getting an extra guac with that.
Wow.
Go to the next slide. I have a. This is a different way to show it. So this is macro trends, and it shows
Hmm.
every quarter. So you can see Target had a brief run up and then dipped.
Yeah.
Costco, it looks like they're increasing. I get it, but you got to look at the y-axis
Yeah.
there. It's
2.5 to
yeah,
3.5, maybe. Like,
and
yeah, I
then
get what you're saying.
look at the y-axis for Chipotle. It's 5, 10, 15. So
Yeah.
you can see they had a big dip in 2015, 16. That's when they had like 10 E. coli outbreaks. Like they just kept on having one. But after that, it was normalized where about it should be. And now they are taking advantage. They're not having more people come. They're not doing what they were doing in 2013. They're just charging the people who go more money.
Yeah.
It's
Yeah. I mean, one we didn't include in this analysis, but like another one you hear that about is with Starbucks as well, right? Um,
we
yeah,
choked on Starbucks.
I know. The interesting thing too, that I'll start briefly mention with Dylan here is Costco has an entirely different business model. They're not trying to make money on the actual products. They're trying to make money selling memberships. So
Yeah.
it's a kind of it's nice to see the fact that their margins basically stood flat during this entire time period because that's what their business model is supposed to be.
Yeah, and I did see a couple like Instagram things of people looking at a product at Costco in 2018 versus now. It's like 3 times the price, but their numbers don't lie. So this is the net margin. So there's not operating margin. This is after you paid for the goods and then paid for sales and debt, just everything.
Yeah.
Costco literally went from 2.4 to 2.5. They were I didn't even do the math because they were up by like 0.05. It doesn't it's the
Yeah.
same. It's a straight line.
It's just wild. You're going to see something. The Target one here is interesting. We're going to look at Walmart here in a second, but
Yeah.
it's funny how different businesses are operating in this environment. Some of them are really taking it on the chin, just like the American households, and other ones are just out there, just stacking, fat cash.
Chipotle.
Yeah,
Chipotle.
yeah, Chipotle.
So
Yeah, exactly.
they are at double their net margin in 4 years. So not only
Wow.
are they making what they were with inflation normalized, they're making double their net margin. Those son of a bitches.
Yep.
So Target, you can see net margin fairly stable. I put a circle over Costco's because it looks like it's going up, but you got to look at the
Yeah.
x-axis there, or sorry, y, and then Chipotle, them sons of bitches.
Yeah. Just getting greedy on American households here.
So this was kind of interesting. This is a menu from 2017, and I did 2021. So you can see
Wow.
chicken, they went up, about $1.25. Then from 2021 to now on the left, chicken's now $9.45, and I believe they have
Jeez.
another price hike coming in like 3 months.
Yeah.
So
Yeah.
just
So
from 2021 to now, they went up like 17%.
wow. I'm not the biggest Chipotle guy, but like this is crazy. I went there like last week
I'm
and I got
pissed.
the carne asada, the one that they have on the menu, and I got like extra protein in it.
It's
And it
20
was a
bucks.
$20 burrito.
Yeah. Mm-hmm.
Yeah, pretty wild.
Fuck
So
them.
I took a look at a couple different companies because I was trying to think, what exactly do most American households kind of interact with on a regular basis. And these are the four I settled on: Walmart, McDonald's, Mondelez, which is a food conglomerate, and then P&G, Procter and Gamble, which is a conglomerate of other household items that people do. A lot of these regular brands you interact with on a regular basis. Obviously, Dylan's a big fan of Oscar Mayer bologna. That's like 90% of his
Ugh, that's
substance
just
right there.
fake meat. I will say, looking at yours, I can guess what the results are because I had COVID 2 weeks ago. So, I got like a NyQuil stuff, which is way
Mm.
overpriced, and that's one of their brands.
Yep. Yeah. So as far as way I set mine up was I looked at comparison direct side by side here. So we have pre and post for McDonald's, Walmart, Mondelez, and P&G. And if you look at the operating margins right here, so McDonald's pre operating margin 42.45. Now, post pandemic, 45.39. I did this by taking the last quarter of 2019 and comparing it to the most recent public data as far as operating margins go. And then net margin 28% to 33%. So McDonald's is screwing you, just so you know. Those
It's
fries may be delicious, but they're screwing us.
that's 5%. It seems like it's food because your Burger King thing. It seems like it's fast food. It honestly seems like it is cheaper than ever to eat healthy. It really does
It's
because
an
it
interesting way
just
of looking at it.
you go to Costco, you can get a whole thing of chicken breasts, and it's your $20 burrito, but you got 5 chicken breasts. It's
Yeah,
crazy.
very true. Walmart, very much like Target in the previous kind of section here. So they're pre-pandemic 4%, now 3.46 for an operating margin. Net margin 2.77 down to
Yeah.
2.23. Like they are running on razor thin margins, and they got
Hmm.
smacked around. So it is not the Walmarts and Targets of the world that are
It's
profiting
not.
right now. It is the McDonald's and Chipotle's is what we've seen so far. So Mondelez, that big food conglomerate, 14.86% before, 13% after, 15% net margin before, which is weird because the net margin should never really be higher than the gross operating margin. I'm not really sure exactly what happened to that accounting there. That must have been something unusual as far as like a accounting charge, but still, the fact that it's basically the same as far as their actual operating margin. And then, I'm sorry, the trend is observable there. The net margin went from 15% pre-pandemic down to 12% now.
So that
So
one's
they are actually
surprising.
taking on the chin a little bit from Mondelez.
Yeah, that one's
Yeah.
surprising.
Yeah. And now we got the big
Fuckers.
greedy son of a bitch in the room, the friggin' NyQuil manufacturer over here, Procter and Gamble, 9.78% operating margin before, 22% now. Their net margin went from 6.5% before to 17. They've almost tripled their net margin during the pandemic era of unprecedented inflation. They are just absolutely obliterating the American household.
So
Uh,
remember,
so that's how it goes
this
down.
is inflation, right? So this is they're not making more money because inflation. It's percentage. That's how gross that number is.
Yeah.
It's so inappropriate to have that much. It's just you're completely taking advantage of a situation. You're just up in a
Hmm.
tower being like, how can we fuck
Yeah.
these people? Fuck
Yeah,
them.
exactly. They don't really need healthy teeth. They can't afford Crest anymore. Their clothes are soiled and they can't buy that Tide. They've taken advantage of the situation to really hide some real significant increasing in profit ratios as far as their net margin and their operating margin over at P&G and McDonald's to a lesser extent. I guess if you put
Chipotle.
them like a hierarchy, yeah, it'd probably be P&G was like the worst one we saw, then Chipotle, and then McDonald's as far as like companies that are taking advantage of you. But pay attention to these brand names and maybe you vote with your dollars and choose not to buy Bounty. Buy your Costco brand, paper towels instead.
Yeah, this made me want to go to Costco.
Hmm.
They're keeping it real. So I want to do this video. This was an interesting video. If this does okay, if you guys want us to look at other companies and compare them, like I would like to see Starbucks. Actually, I forgot about that one.
Yeah, yeah, that's a big one.
I'd like to have a naughty list of companies to just not use.
Yeah,
This is a problem when you have these companies that are taking advantage of a situation like this. It's terrible. It's unethical. It's horrible. So
I agree. I agree. Let us know what you guys think about this unusual video content for us down in the comments below. We'd love to hear your thoughts.
later.